The Reserve Bank cut interest rates for the first time in more than 4 years yesterday, providing some very much needed relief to cash-strapped borrowers. Joining me now is business reporter Edward Boyd. Ed, good morning to you. Governor Michele Bullock says rates may need to stay elevated for some time to keep inflation on its downwards path.
Yeah, the good news is we did see a rate cut, the first rate cut since November 2020, 25 basis points. So for a $500,000 loan, you're looking at about $77 per month in savings. For $1 million loan, it's about $155. The bad news, though, from Governor Bullock yesterday at the press conference was rates may need to be elevated for quite a while to keep inflation on its downward path. Because yesterday the RBA put out its statement on monetary policy, very detailed quarterly economic forecasts, and it basically shows that trimmed mean inflation, which is the figure the RBA look at when setting the cash rate, is expected to stay at about 2.7% until the end of 2025. So, in other words, to keep inflation low, Governor Bullock is saying that rates may not be falling too much more from here, Holly. So that's the tough pill to swallow, but the good news is rates are down for the first time in over 4 years.
Finally, a fall and some relief for some Aussies. Some much welcome news there, Ed. Also shifting topics, the December quarter wage growth numbers will be released this morning. Now, wages could fall to 3.2%.
Yeah, so these are really important figures as well that play into the whole inflation and unemployment story, because we've actually had unemployment at really low levels. It's been at 4% for the past few months and been hovering around 3.5% to 4% for the past couple of years. And normally what happens is when the unemployment level is that low, wages accelerate because businesses struggle to find employees. They need to pay higher salaries to attract people or poach them onto their jobs. But what we're going to see today with the wage price index at 11:30 is an expectation that wages were at 3.5% in the September quarter. They're expected to fall slightly to 3.2%. So that basically means that the cash rate is probably going to stay where it is or potentially fall a little bit further in the coming months due to wage pressures starting to ease on our economy, because we did have a big acceleration of wages a couple of years ago. Those pressures are easing. It also means, the good news, the cash rate can probably fall a little bit further over the next 6 months or so.
Okay, Ed, thank you for that.